If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started.
Mr. Amir, how you doing, boss?
Hey Jimmy, what's up, man?
I am here, bro. I am here. What's going on?
Hey, how you doing, brother? How's everything going, man?
Everything's great, man. Everything's great in my end. About yours?
Everybody's great, man. Great. So how's life going, man? How's life treating you these days?
Man, life is treating me very well, bro. Very, very well. Loving it.
Aw-
Love it.
Awesome, man. So we meeting up today to talk some some finances, and just talk money, right?
Yep.
Today's episode, we're going to talk about insurance and all the different types of insurance.
Yes. It'll
There's
be.
three
Uh-huh.
There's three main insurance though, for the most part. There's term, right?
Correct.
And we have whole life,
Mm-hmm.
and we have an IUL.
The
So,
permanent.
Mr. Jimmy, so you wanna share you being in the field, you being in the financial service industry. Can you share with our viewers, listeners today, the different types of insurance when it comes to those three? Can you just share your knowledge on that?
Yes, for sure, man. For sure. I'll be glad to share my opinion. Actually, just giving information. I'm saying, giving details and helping the community understand the different type of insurance that's out there. I think that would be very important that they know what they have. That's what I'm saying. So for sure, man. Sure, I would be glad to participate and help the community understand these
So,
terms we have.
right, good, man.
Yes, sir.
Now, let's start with let's start with term insurance.
Okay.
What is term insurance?
Term insurance, right? As you hear the term, right? It's been a lot of following discussion while being, a general and natural provided good foundation and understanding how insurance work. You know what I'm saying? Uh, you know, um, and the term insurance that's down here might be different in different other countries. Maybe Canada, right? But a term insurance really is just insurance that lasts, in terms. Every terms, your premium goes up. All right, so your cost of insurance goes up with those terms. Sometimes people get it for 15 years or 10 years or 20 years or 30 years. Whenever you put your money in that term insurance, what you get is that let's say something would have happened to you, right?
Yes.
You leave your family. Well, I'm talking about death. I'm not just talking about if you get a headache or you get a heartache. You know what I'm saying, if you get if anything happened to you, still you living, then that term insurance won't fall in place. Well, I'm gonna take it back. Depending who you have it with, like Transamerica, they have a living benefit, which is critical and chronic. If something happened to you, like critical, chronic, terminal illness, then you get to use
Mhm.
that life insurance because it even said it life insurance. Life insurance should be for the living, not for the dead, right? Now,
Yes.
with the term insurance, most people get it, to cover their mortgage, just in case something happened to the breadwinner. Breadwinner gone. Let's say, God forbid, um, not come on wood.
Yes.
Somebody passed, you know, the breadwinner passed. Um, the the insurance left for the for who's is actually living to take care of the house, the living costs. You know,
Like the wife. Like
yes.
yes.
So you know no debt won't occur or won't hurt the family. You know, so won't be any hardship of any nobody going into debt, right? And you know, a lot of people misunderstand that, right? No, you always want to make sure your family is safe. Always leaving
Yes.
something behind. And
Mm-hmm.
under that term insurance, you know, they have other renewable term, you know, as ART, annual renewable, which is every 5 years. You have to renew it, and the cost of insurance goes up. Um, and it's more under that, right? You have level term and you got decreased term. You got return of premium term. All right. I wouldn't want to discuss all these because I'll be here all night. So if anybody want to have some, let's say anything or need any suggestion or not suggestion, but have needs more information on those I just named, they can always reach me up, hit us up, inbox us or send an email to us, and we slowly will explain these terms to anybody. All right. Then you have what I say the permanent life insurance, right? Permanent life insurance, it's what I really concentrate in. I would love a lot of people to understand the permanent life insurance. Permanent life insurance is something that have cash value in it, right? And also it gives you a living benefit,
Okay.
depending on the company. I want to say, but with our company, we give critical and chronicle. And plus, you can project what you want to retire with. You know what I'm saying, if let's
Mm-hmm.
say somebody say they want to retire with a $4 or $5,000 in the long run, right? We can, plan, do analysis and plan. Uh, we'll do a planner for them and tell them, okay, this is how much you have to put away, right?
Yes.
And that will cover, that $400,000 that you want to retire with, all right? So what I'm saying is, you could use this vehicle as a retirement, all right?
Now, now, Jimmy. So we have we have you say permanent life insurance.
Mm-hmm.
You now is there two when we say permanent life insurance? Is there one type of permanent life insurance, or is there two? What I mean, I know that the last two insurance that we talked about, as far as the whole life and IUL, um are those considered permanent life insurance?
Well, the permanent life insurance is almost like a whole life, right? But the permanent life insurance give you more, more leverage to put money in and to have more growth. All right, you get more
Yes.
growth for the permanent life insurance versus with the whole life insurance. You get the growth, but depending on the company, it's a lot of interest. Whenever you borrow from your own cash value, you're paying too much interest, which and when you look at the inflation, it don't offset on inflation. See what I'm saying?
Yes.
So I'm really in love with the permanent life insurance. I know this is the ice cream and the cake. All right, this one it gives you so much features. You know what I'm saying? If you want to compare that to the whole life insurance, okay, it's just like you having a Honda, right, versus a Rolls Royce. I'm saying a
Yes.
Rolls Royce never fall in value. The value always increase, no matter what. That's why so much wealthy people buy the Rolls Royce versus a
Okay.
Honda. A Honda is good. You know what I'm saying Honda take you whatever you want to take you, but it don't have as much features as the Rolls Royce. Would you agree with me?
Correct. Yes, I would.
All right. So this is how permanent life is. Permanent life, is a multi-purpose life insurance. All right, that provides you with so much stuff. Right, and if you understand the mechanic of a permanent life insurance, man, you can listen. You could put all your egg in that one basket. You have nothing to worry about. All right. And once again, please understand this. I'm not trying to tell nobody how to invest. All right. I'm not trying to tell nobody, where to put their money. Remember, this is free information we are giving you, right? And also everybody have their own opinion, have their own explanation, on whatever tools that I'm breaking down. All right. So, but if anybody have any question, please inbox us or send us an email, and we're sure we'll answer that question for you the best way as possible. All right. So,
Yeah,
mhm,
let me share the email. The email is tgwealth36@gmail.com.
mhm.
tgwealth36@gmail.com. And we'll be able to share more information regarding what Jimmy's talking about. So, yes, Jimmy, go ahead, continue.
Okay. A whole life, right? Whole life is the traditional, cash value life insurance. All right. It's the original and oldest form of cash value life insurance. Instead of paying just the cost of insurance, you pay higher premium. The difference between the cost of insurance and the premium goes into your cash value. Whole life policies give you a guaranteed rate of interest. Some insurance company may provide dividend, but dividends are not guaranteed. All right, and you hear the dividends not guaranteed. All right, and also with the whole life, it is a fixed premium. With a permanent life, you could decide to put more or you could decide to put less. All right.
Okay.
So you
Yes.
you, you can put, let's say you have $10,000 or $100,000 that's laying around, that's not doing nothing in the bank. You could, depending how how much you had opened a permanent life, right? How much insurance you have. If it's not beating the 7 pay, right? You can dump all that $100,000 in there. All right. Let's say some depending on the company, some will give you a cap up to 15%, like ours, and others will give you a cap of 30%. I mean, I'm sorry, 13%. All right. Let's say you have that $100,000 in there, right? And 1 year, the permanent life does a 15%, and you times that by 100, you'll know how much money that you have, and that could, I'm saying, that's something that, I'm saying, you could literally live off the interest of the insurance. That's what's so beautiful about this, and they don't charge. We don't charge. Well, the company don't even charge you as much as you want to borrow out of that policy. You know what I'm saying, they charge you under what, 2%. So man, you getting a bang for your bucks at the end of the day. You know what I'm saying, plus you have the insurance, so you're getting compound interest with the permanent life insurance, right?
Yes.
And then you have a guarantee also with the permanent life insurance. All right. And you have more leverage, and that's what I love about this thing. All right, I say it's a multi-purpose life insurance. All right.
So, wait, so you said something about 7 pay. So, can you just touch on that a little bit in case uh, we have users that, not everybody's really familiar too much with the terminology. Just kind of elaborate on that a little bit.
The 7 pay. Listen. I would love to go over. We have not much time because we're gonna be touching on other stuff. Like I say, if anybody wants more information,
Okay.
they could inbox us, email us, and we get all the information that they need. In their hand. Remember, this is free information, but we already have the topic that we're gonna talk about. So if they have any information, they can give us a call or inbox us, and we're glad we'll help them. So go ahead, Mr. Mayor. What's next? What should we be touching on?
Yeah. So, well, when we went back, so we talked about the different. So you talked about the different insurance, right?
Mhm.
From whole
Yes.
life to permanent to term.
Hmm.
Um,
And also, don't there's more. It's not just those three. There's
yeah.
other insurance. I'm saying other life insurance policies out there. I'm saying it's not just those three. All right. And
Yeah.
also under that term insurance, I also touched up on I think like 6 to 5 more. All right. And also with the universal life, universal life, it have more also too. It have a UL. All right.
Mhm.
Uh, and also it have the UL, the IUL, the whole life, the term, and those in those segment, you still have more that's under it. And like I said, we want to just touch based on the main one. All right. The UL is also a main one, right? The UL, the whole the universal life, it works like a whole life insurance, right? It's a generally intended to provide protection for a lifetime and accumulate a cash value, right? Unlike whole life, the UL permit a variety of different investment options, many of which may have the potential to outperform the guarantees offered by a traditional whole life policy, right? Um, like with the IUL, right? Not the IUL, but the UL, right? Uh, you may use it as a tool of implementing some taxes and or estate strategy. Like with all of them is like this, right? Let's say you can't pay, right, for this for the UL, you can't like you have this policy, you can't pay it. What is gonna happen? You're gonna go to the cash value and they're gonna pay your premium off, right? And it's gonna pay it until it just run off. Well, and when you stop paying it and the cash value run out, the policy is gone. All right, and that's one thing I don't like about the UL. Right, it'll eat its own cash value until there's no more in there. Okay, so what else would you want to touch base on?
Yeah, so it's good to know about these different, as different type of insurance that you went over. Now let's talk a little bit. Let's talk about at least the ones that people should really be familiarized with when it comes to the permanent insurance, the
Okay.
term, and then also the whole life insurance. Now let
Mm-hmm.
me ask you. Now, is there a? I know these. There has. Is there a certain limit? I know when we talk about whole life, right, or permanent, those are until you pass away, right? But
Well, let's get this straight. The term life, right? It gave you up to 30 years, right? But
mhm,
after the 30 years over with, you don't have any insurance, and the cost of insurance is very, very high. So term insurance have its time and place, right? Somebody that's young, very, very young, you know, if they don't have enough money to really put in insurance, right? And if they're not looking for retirement, if they're not looking for any growth or try to build any wealth, no, I would recommend them to term insurance. Right, term insurance is cheaper in the early years, right?
yes,
And like they have its time and place. Okay, but I would recommend somebody that have a term insurance over 5 to 7 years to convert it to a permanent life insurance, right? And whole life insurance, um, no, you have to pay to your whole life, all the way to 100. You have to pay all the way to 100,
yes,
right? And like I said, the premium is fixed. This is what you have to pay. If you miss a payment, you're gonna end up having your insurance lap. Um, with the whole life insurance, no, it does guarantee you interest, right, on it. And then like I say, let's say you're 100 years old, you paid it all the way up, then you have insurance.
uh,
What's gonna happen is the cash value gonna take care of that insurance.
yeah.
Once
That's
you,
what I was getting to. Was there's a certain age limit to where it stops at?
yeah,
You
it stops at 100.
yeah. So that's what we want people to know. When they say whole life, yeah, it's your whole life, but whole life could be you pass away at a certain age, right?
Yes, correct.
Let's say you live long,
Mm-hmm.
especially technology, the medicine we have these days, and all, and people are living longer. But there is a cap, a certain point where the insurance is going to say, okay, hey, you know, this is where a certain age limit, this is where it stops. So
Yes.
yeah, so that's where it's good for people to know that because when people think of whole life or permanent, people think, oh, it's until I could be 150 and it's still, and it's still around. No, that's not what happens. So that's good that you covered that and you went into term, which is very important. What people don't realize is when you're young, it's good to get term insurance. And it's good because, while you are building your wealth, you could put it in place. But one thing you
Correct.
do have to, you can put it in place while you're building your wealth. Just something, just
Mm-hmm.
have a protection in case something happens where wife, whoever's the beneficiary, is not struggling.
Yeah, correct.
Especially if you were the breadwinner and that income goes away, then whether it's your wife or whoever, they're in trouble, right? So it's good
Mm-hmm.
to have term insurance. Now, as you get older, and yes, it gets more expensive because of the fact you're older, and the way they even come up with that data is they take that data and they take it with the, different types of age group, and they say cost of insurance will cost this much, and this is how much this cost of insurance is costing this age group, and this is how much it is going to be to take care of them. Yeah, people are living longer, but it's more expensive when you get in the long run. So that's why it's good to have this term insurance because, yes, the one thing people have to understand too is with term insurance versus permanent is when term insurance, just like you say, it could be 15 years, 30 years. And if you don't pass away, you get nothing. Besides the fact that if you pass away, that's when you get that money, right? But
Mm-hmm.
if you live 50,
Well, you don't get that money. Your family get the money.
yes, your family gets the money. But that's if you pass away. And if you live longer than the term, the 15, 30 years, then you lose it. And
Yep.
you don't get none of that money back. So it's really good when it comes to permanent insurance to have that, especially the one that has cash value. Where you touched up on that, that was very important for people to know because it's very, very important to build cash value, and it goes to show you the power of insurance. And there's so much more like we could go over, but we'll be here all night, going over this.
Mm-hmm.
That's why it's good for people to give back, reach out to us so we can talk a little bit more about it because there's so much you can do with it. If you know how to structure right, you have a good advisor that knows how to structure a really good policy for you. They can set you up for success as you get older.
Correct.
Thank, good job, Mr. Jimmy, for really, just sharing that knowledge with the people because it's very important, these days to really have that knowledge when it comes, especially insurance. People shouldn't, if you're a certain age, especially if you're a millennial, late whatever, millennials, I think they consider people born in 80s or 81 or 82, something like that, to 1994.
Mm-hmm.
But if you're in that age range, especially that age range right now, married, family, settled down, kids, you don't want to be that male that you pass away and your wife has to struggle looking for another job, has to sell the house, sell the cars, everything because you didn't think of your family. Too many people get caught up in that situation where they don't think past today because tomorrow's not promised. So today you have to still think at any given moment something can happen. And if that does, where is your family going to be?
Correct.
And that's very important that we
Mm-hmm.
people know that information because it's one of those things. It's very important for people to know that because it's one of those things that it happens and it's reality.
Correct.
Us being in the field, I'm pretty sure you came across someone um, that's like, oh my gosh, right? Like you should get insurance for your family, especially for us too. Uh,
Mm-hmm.
Just don't know. So
But see, the thing is, that's how the wealthy people does it from hundred years ago. I'm saying, and and they still doing it the same way. They always find a way to transfer their wealth over, and
mm,
even if I'm saying if they starting something new, I'm saying they want to grow wealth, they getting life insurance, so they could grow wealth. 'Cause remember, growing wealth is not something that's gonna happen in one day, or in 2 3 years. Growing wealth, takes some time. To make money, to grow money, to become wealthy, that takes time. It takes time and planning. You have to draw a plan, right? If you don't draw the plan, guess what? You'll fail. But if you do draw that plan and follow that plan, guess what? You'll be successful. Most of us, why we don't become successful? You know why? Because we always failing the plan. It's not the plan that failed us, it's us failing that plan. We fail to plan. All right. So, like all these things I just spoke about, with the term, the whole life, the universal life, and I index universal life. No, you probably have the same dilemma when buying a car. Should you buy a sedan or SUV or a minivan or a pickup truck? To the mechanic, all cars are similar. They share the same basic: the engine, the transmission, and the four wheels plus its steering wheel. The difference is what they put on top of it. And pick the one that fits your need. That's the best thing I could say to somebody. I mean, that's why I say, the term, is one of the one that I don't really like. But guess what? It have its time and place. All right. Uh, you know, they add, like Louise car. You can add a flatbed, whatever. Then you call it a pickup truck. If you put two seats, you call it sport car. If it's four door, you call it sedan. If it's four big wheel, it's gonna be SUV. See, it's basically almost the same with the insurance. All right, depending how much money you have to put in there, or how much money you want to have, right? You choose one of those. Or
yep.
if you have enough money, and you still want to have your family to be covered, because you don't want to leave if something happened. Let's say we'll knock on door. God forbid something happened, you don't want to leave your family in debt, right? You don't want your family to be destructive, to be destructive, or to leave them in a hole. Saying you
Mhm.
want to protect your family. Also, maybe saying you wanna give your family something that your parent didn't give you, and you can start with one of these insurance instead of just putting your money in the bank, not doing nothing for you.
Yeah.
Find one of these, right? Find one of these that's going to give you the most interest. The most interest that will help you build wealth over time and stick some money in there. You don't have to put all your money, but stick some money in there, right? And leave it for long term and see how much you grow wealth with this. All right. And not to bring any one of these down, choose one over the other. Remember, all of them have time and place. All right. And I can help you anyway, anyhow, with any one of these. And please remember, the bank have these. That whenever you put your money in the bank, the money that you put in the bank, the money going in one of these. And when you need a loan, guess what? They stick in your credit card where you're gonna have to pay back interest.
Mhm.
So please, families and friends, and people that I don't know, people that don't know me, listen to these words. And if you have any questions, please inbox us. Don't be scared. Don't be a stranger, right? We only just bringing value to you. Okay. So at the end of the day, listen. If you can just take some of this information, if you don't understand the information, don't be scared to become a friend. We are here to help you. And Mr. Amir, do you have anything else?
No, Jimmy. So I'm glad we touched up on that. We was able to share. It's good to get on a podcast, and really just talk the different types of insurance that's out there. So we till next time. So what the people should be thinking, Jimmy?
Thank generational wealth. I'm
All right,
saying
awesome.
it's what you want to think.
All right, awesome, man. So good talking to you, bro, and we'll meet up next week.
All right, bro. Let's do it.
All right.